Here the question is P, Q and R were partners in a firm sharing profits and losses in the ratio of 5:3:2. They agreed to dissolve their partnership firm on 31st March 2017. And the last line is prepare necessary ledger accounts to close the books of the firm. The necessary ledger account is cash account, realization account and partners capital account of P, Q and R. R is having a debit balance in the partners capital account in the asset side, and P and Q are having credit capital balance. And we have one important point, investment fluctuation reserve. Then we have to start with realization account, that is to plant and machinery by transferring assets 30,000, to stock rupees 5,500, to investments 15,000, to debtors 7,100, and by provision for doubtful debts rupees 450, by creditors bills 10,000, by bills payable 3700, and by investment fluctuation fund, that is 4,500. We could have written like this: investment fluctuation reserve. When investment and reserve both are there, it will be taken in the debit and credit side of a realization account. If only investment is there, it will be taken in the debit side. If only investment fluctuation fund is there, it will be distributed in the capital accounts credit side. Then read the question. P took over the investments at 12,500. By P's capital account, investments taken 12,500. Then stock and debtor realized 11,500, that is by to P's capital account commission. The rest one is, it is written that it is 1,000 rupees for commission, it is P's capital account hyphen commission. It is written on the top of the balance sheet, just before the balance sheet. P was deputed to realize the assets and pay the liabilities. He was paid 1,000 as a commission. Hence it is to P's capital account commission. He is to get a commission of rupees 1,000 for his services. This is fine. And actual realization expenses rupees 900 as given in the second last line will be treated in the later stage. We will explain you about that. The next one is by cash account asset realized. Debtor stock and debtor realized 11,500. Machinery sold to Q for 22,500 for cash. Hence it will not be by Q's capital account. It will be by cash account asset realized, that is machinery. That is machinery 22,500. Unrecorded assets realized rupees 1,500. Now the totaling will be rupees 35,500. This is cash account debited to realization account, 35,500. In the debit side, it will be to cash account liabilities and expenses paid. It is creditors rupees 10,000, bills payable rupees 3,750, realization expenses, actual expenses rupees 900. The total amounted to 14,600. And here the debit side is having higher value. It is total to 73,200 taken to the credit side totaling, and the difference is by capital accounts loss on realization transferred in ratio of P is to Q is to R, that is 5:3:2 in the top line. The difference or loss is 6,550. P will be getting 6,550 multiplied by 5/10, 3,275, Q 3/10, R 2/10, that is 1,965 rupees and 1,310 rupees. Then your capital account, draw the capital account by balance brought down for P, and Q in the credit side we will have 37,550 and 15,000, and in the debit side we will have two balance brought down in case of R rupees 8,000, and two realization account investment taken by P rupees 12,500, and by realization account commission payable to Q for services rendered rupees 1,000. That was realization to P's capital account. Hence in P's capital account this is by realization account, ledger posting. Next one is realization loss, that is for P rupees 3275, Q rupees 1965 and R 1310. And we have a debit balance in R's capital account. It is in the debit side, two balance brought down rupees 8000. Then in the credit side we will have rupees, in the debit side R's capital totaling will be 9310. Take it to the credit side and write down by cash account 9310. This is finished. For P and Q, total the credit side, write down in the debit side, and the total is rupees 38,550 for P. For Q rupees 15,000. The difference is to cash account. For P rupees 22,775. For Q rupees 13,035. Now your cash account, two balance brought down. We have cash 5,600 as the first item in the asset side. To realization account, that is 35,500, all assets realized, and liabilities paid amounted to by realization account 14,600. And to R's capital account, R is bringing in cash, that is the journal entry is cash account debited to R's capital account 9350 ledger posting, and the payment will be made to P and Q, that is P's capital to cash and Q's capital account debited to cash account 22,775 and 13,035. And the total will be rupees 50,410, both the sides tallying, debit and credit.